Okay, this is the final tutorial video with your InsMark Essential software. This is the tutorial video for the various financial alternatives module, which is just a fantastic presentation. You're really going to enjoy seeing how this works. And so, just to review, I'm hoping you've had a chance to watch the video on the main menu, this one up here, and as well as watching the tutorial videos in the illustration to values modules here, permanent versus term module, and most importantly the other investments versus your policy module. And the reason that's the most important is we entered some carrier source proposal information in this tutorial that we're going to use in the various financial alternatives presentation I'm going to show you now. So if you have not watched the tutorial video in other investments versus your policy, please go over into that module. Let's go there now, and if we go over there, you'll see this video here. Go ahead and watch this video here, and then when you're done with that, then come back and watch this various financial alternatives video. It's going to save you some confusion. So first thing I'm going to do, back at the main menu, I want to view the sample. This is a sample case. We've got a couple here, but I'm going to view the sample for various financial alternatives. This is a sample presentation, and let's take a look. We'll preview this. Okay, it's coming up. Here we have our various financial alternatives, and you'll see there's the cover page, the preface. I'm not going to spend a ton of time. There's a flow chart. Here's the numbers page. So what I'm going to do is recreate this presentation and then walk you through how we do that. So that's what we're ultimately trying to get to. I'll move that off here for a second. And so what we're going to do is we're going to go into create a proposal. This is the Bill Jasper case. And you'll notice Bill Jasper is listed up there. And the reason Bill Jasper is listed there is because in the video for other investments versus your policy module, we entered the carrier source proposal information, and then that's now still stored there. So I'm going to edit the selection and show you what we entered. Go through this kind of quickly. So it's a 50-year illustration. This is the source data from the carrier for this various financial alternatives presentation that we're going to walk through. All of these premiums and cash values and death benefits and so on. So male age 46, name of the company, death benefit, we came down here, premium $85,000 a year for 20 years, and then $290,000 a year loans from years 21 through 50. There's our cash values and death benefits from years 1 through year 50. Okay, that's what was entered. We have the total policy costs, the mortality charges plus admin charges. We entered those in, and that's the case. So now that the premiums and cash values and death benefits for this case are loaded and ready to go, the next thing we're going to do is we're going to come down here and answer these questions to finalize our various financial alternatives presentation. So the first question is saying income tax brackets, so we'll tell it 40%. And what I'm doing to know how to answer these is when I looked at that sample presentation, I went to the values page, it kind of jumped, and then here's a lot of those assumptions on the comparison of values. So I'm just kind of using those to answer these questions. Going to illustrate for 50 years, that's good. Okay, so cash flow from policy and alternative investments. For each investment, show any cash flow in a separate column, like a separate retirement column. If you do that, there's only room to compare the cash value life insurance product to up to 3 alternative investments. What it means is if you were willing, and then this piece here, show any cash flow as a negative premium, then you could show up to 4 alternative investments. So if you weren't requiring us to show the retirement income as a separate column, then here, this after-tax policy proceeds, if we could just show it as negative premium, then you could actually compare to 4 alternative investments instead of 3. But in this particular case, comparing to 3 is enough. That's fine. So I'm going to leave that checked at the top one. So I'm only going to compare the policy to 3 alternative investments. So this first one is going to be let's find, and there's all these different things, but I'm going to find the taxable bond fund. So let's see here, taxable bond fund, there we go. And now it's going to ask me the yield, and again, in the sample presentation, we gave it a yield of 6.5% and a management fee of 1%. All right, so that one's done. Great. The next one, again, if I'm looking at this and looking at these, there's the taxable bond fund, tax deferred account, equity account. So this next one is a tax deferred account, so I got to find that. So let's see. I think I just went by it. Tax deferred account, there it is. All right. The tax deferred account yielding 6.5%, okay, and we didn't put any sales charges or anything like that, so that one's done. Pretty easy. Last one we did is the equity account, and we also did the equity account when we did the other investments versus your policy tutorial, so this will look familiar to some of you. All right, on the equity account, our yield was 6.5% was our assumption. We had a management fee of 1%. And then we also had a dividend payout, which was a 2% annual dividend, which added to the 6.5% growth rate. The dividend tax was 25%, so that's state and federal. Portion of capital gains that is long-term, we assume 60% would be more favorable taxation. And the capital gains tax rate would be 25%. And finally, the portfolio turnover rate, 40%. Okay. Okay, and that's done. So we'll go okay. So we have our 3 alternative investments and our assumptions. Proposal heading, that's cosmetics, and then if an investment alternative goes to 0, do you want to show it just blank, or do you want to accumulate and compound negative? It's just a style issue. And then you can add a cover page. Okay, we're basically done, and now we have our various print options, and what I'm going to do, if you print preview over here, you've seen this from the other videos, it'll produce all these reports, but we're just going to surgically look at a couple things. Let's look at comparison and values, and we'll do a quick preview. Okay, so here we go. So there's our $85,000 a year 20 pay. We have our taxable bond fund, our tax deferred account, our equity account, and then over here in the far right we have our cash value and our death benefit. We start taking $290,000 out a year, and look what happens. If we go down, all of these alternative investments are totally depleted and out of money by age 80, and the cash value policy continues to produce tax-free income of $290,000 a year plus have the cash values and death benefits. So that's a very impressive report. Next, let's take a look at comparison of plans costs. This one is really a killer. So let's take a look at this. All right, so here we have our comparison plan costs, and what I want to show you is this is showing the asset-based management fees we put at 1% plus the tax costs for the each alternative investment compared with the mortality and administrative charges of the policy. So if we come down here, you'll see that over 30 years, the Index Universal Life has total costs of $341,993. But look at the alternative investments. The taxable bond fund, $1.1 million in total fees and taxes. Tax deferred account, $1.161 million. Equity account, $1.5 million. So it's just an incredibly powerful summary to show that the Index Universal Life might have some higher charges in the early years, but over time, because there's no asset-based fees like there are with most other alternative investments, our costs are so much less over time. It's just an incredible report. And then you can go down and look at the summary of costs over 50 years. Yeah, the Index Universal Life costs are $1 million because everything else doesn't have any more administrative charges because they're all depleted and they're gone. So it's just a very powerful way of showing the power of the structure with the low fees over time with the cash value life insurance product. All right, next, let's take a look. I want to look at the matching interest rate report. This is kind of a fun report. Take a look at that. Okay, so here what we're showing is to have the same values in the 50th year as the Index Universal Life for the cash values, you can see that you'd need to earn 14.72% in the taxable bond fund, 9.97 with the tax deferred account, or 9.63 with the equity account. So what this does is it effectively shows what the alternative investments, forget what we assume, 6.5%. We're saying is no, you gotta, in the taxable bond fund, you gotta make 14.72% to end up in the same place as the cash value product. Pretty powerful. All right, enough of that. Next, let's find the plan cost multiple over here. The plan cost multiple mini graph 2D. I want to show you one of these. I really like this report. It's just fun. Kind of shows everything at a glance. Okay, here it is. Now, what this is showing is, over here, we produced with the index universal life $8.7 million of cumulative tax-free retirement income over the life of the plan. And yet, with these other three alternatives, they're all at 4.3 million, 3.4, 2.5, about half of what the life insurance policy is able to produce. So I just think that's a really fun summary of results. And then the last thing I was going to show you was I wanted to show the details of this one, details of the equity account, details of the portfolio turnover, and we'll do a quick preview here. Okay, so what I wanted to show you with this is I think InsMark Essentials has the most sophisticated tax analysis of how equity accounts really work with their dividends and their portfolio turnover rate and capital gains and short and long. This shows you a detailed analysis of how we do the taxation to arrive at what's really going on with the equity account when money comes out and how the taxes have to be paid, showing all the equity account details. You can see there's all these additional pages, equity account portfolio turnover details on how that works in the real world, how it's actually taxed. It's invaluable for advisors who challenge the mathematics that we're using, so just very valuable. And so, again, down here, you've seen this many times, we can call this particular various financial alternatives, and call this Mr. Jasper, and we'll call this number 1, and we'll put it in the workbook named Jasper. We'll call this Mr. Jasper, and we'll save or close. And the last thing I'll show you is if we go into the Stored InsMark Illustrations, there you have the Mr. Jasper workbook file, and any of the InsMark presentations we want to run in the future, if we want to keep them in that one workbook file for Mr. Jasper, they'll be nice and organized all in one place. I misnamed this one. I gave this one the name Jasper, so that obviously is a different workbook. So that is various financial alternatives. We really appreciate you spending the time with us to review InsMark Essentials, and we hope it's useful for you.